A lot of traders let me know that last Friday's scalping video was very popular. They appreciated it and wanted more scalping type classes. This is something I've been working on for my own scalping and trading. A lot of times I only have 45 minutes to maybe 2 hours to trade. I usually trade maybe 3-4 days max per week. And I want to, my personal goal is to try to net 30 pips a day when I trade. If I trade 3 days a week, that's 90 pips a week. That's my goal. And in order to do that, I really want to catch more 20, 30 pip wins to, be able to hit the daily goal of 30 pips and 90 pip weekly goal. So one of the ways I plan on doing that with my own trading, and I think this is going to help a lot of other traders, and what's beautiful about this is it allows you to customize it to fit your needs, is the build your own trend tool being placed on range charts instead of 5-minute charts. And because of that, you can set these to do whatever you want. I have 15% weight on the 5-minute trend candles, which shows the percentage of each of the currencies going up and down. 15% weight on the 15-minute bar 20-period moving average. What percentage of currencies are above or below this very fast 15-minute bar 20-period average? 15% weight, 10% weight, 15, 15, and 30. The Momentum Pro measures how far each 5-minute bar moves compared to the 20-day average for this time of the day. So when you average all those together, you have some that show direction and some, like the ADX trend and Momentum Pro, that show the intensity of direction. And basically you can see that the CAD is incredibly weak right here. The euro is very strong, and also the dollar's weak. So basically, if you're going to look to scalp, if you want to trade one with the least amount of spread, so you have a higher chance of netting a profit on the trade, even if it's 5 to 15 pips, between the dollar and the yen, it's clear that the dollar is much weaker. So let's just say right here at 10:30, 10:35, we're going to start looking for euro dollar buys. Strong euro, weak dollar. Okay, so looking at the chart here, the euro dollar for most of the day was weak, and it was underneath the hourly moving average. It busted through that and then came down and found support there, coming up to 10. And because we assigned the time at 10:30 to look to trade, you can see it's returning up to this Fibonacci area, which is a resistance area. Ran into it, found some selling, ran into it, found some selling, ran into it again. Notice the momentum, the FX Build Your Own Trend that compares all the euro-dollar pairs to every other one, and all the dollar pairs shows incredible momentum on the way up and very little amount of weakness on the way down. Keep in mind that the daily, weekly, monthly trend is still down on this currency. So this is one of those trades where if you buy a little sideways rectangle breakout like this, don't get greedy, draw your fibs on there. And more than likely, because this dotted red line is the previous day's low, it's a major resistance area, major sell area. We have the upper containment bands right there, and most of the time it doesn't go above the white band. So 84 is usually your maximum profit. If you bought this breakout right here at 55 and got out at the previous day's low right here, you made 15 pips. If your goal is 30 pips in a day, that's half your goal right there in less than, let's just see the time here, 10:39. So if you started trading at 10:30, 10:34, you had to wait 5 minutes for this trade, and you can see you got your first 15 pips. All right, so let me get rid of this. We'll go back to the new tool that I'm testing and tweaking. I hope to release it in probably Wednesday or Thursday this week. Another currency that a little bit later became strong is the pound right here at 11:30. A little earlier it was kind of iffy, became very, very strong here at 11:30. The dollar is the weaker of the two between the yen and the dollar. So we're going to look at 11:30 of buying the pound dollar. Let's zoom in on this. So here's 11:39, 11:23. So somewhere along this bar was when it broke out. So it's hard to say because range bars don't have any set start and stop times. Every time, in this case, the pound dollar moves 6 pips, it starts a new bar. It could be 1 second into the bar. It might end at the even end of the minute, or it might end 15 seconds into the minute, or 59 seconds into the minute. It's based totally on pips, not time. So it's hard to say when we would have actually had this trade. But let's just say we missed this first breakout and you got this little pullback right here. And let's just say we got into it right here with all this resistance area up here, 10-day moving average, monthly pivot, weekly pivots all there. And you also have the fib of this. If you bought this breakout right here at 67 with your stop right underneath the low here, you're risking 7 to 8 pips. Here's your profit target at 81. In at 67. Let's just say at any of these resistance areas, if they hit them and kind of go sideways or kind of bounce around there, get out. If it shoots through it, then wait for the first sign of it coming back down. If it goes above the previous bar's high and then comes back down, you might want to get out. So I might have gotten out of this trade here at 85 and at 67. That's an 18 pip win. You've hit those two trades, you've hit your 30 pips for the day. Or let's just say you're a scalper, you get into this trade, it goes up, starts to come back down, you get out with 4 or 5 pips. You have a wick right here, which oftentimes is a reversal, goes back up. You get in here at 72, it's going up, 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 comes back down. You're out here, let's just say, at 85 or 84. 12 pip win minus the spread, you might have no less than 8 pips. And so using the build your own trend on range charts, which again, if the market's not moving, you're going to have these current values for a long time. If the market is moving rapidly and there's new bar, new bar, new bar, you're going to have a lot more of these bars, and it's going to be able to let you see a lot more granularity in the trend. The Swiss also very, very strong here. You can see at 1037 dollars week. We're going to look to sell the dollar Swiss around 1030. Let me bring up the dollar Swiss range chart, because this way you're risking about 6 pips, which is the amount of space on the bar, plus a pip or 2 padding in the spread. Let me get rid of this again real quick. When did the Swiss really get some strength in here? Remember, this is a live only tool. I left it running overnight. There was a bug in it. I fixed it this morning, left it running, and it appears, because I've been checking the output of this, it appears to be working great on the individual synthetic pairs on range charts. So I really think this could revolutionize our trading, especially for those like myself that want to scalp, that want to make 20, 30 pips every day, and then quit trading and enjoy their life. So 1037 is when we're going to look to sell this dollar Swiss. So 1037, somewhere around right here. Now, first of all, if you're watching this currency, you can see it went up, hit our 3.0 band, which the majority of the time is the end of the move. And then had a little double top right here. You can see incredible momentum, incredible momentum, incredible momentum. All the time frame trends are up. It pulled back, found support at the hourly, which it normally does, and it failed to go higher. Once it breaks underneath the hourly with incredible weakness, and in fact the most weakness it's had all day, typically you want to draw your fibs on the previous move, and most of the time it's not going to go above the 50 or 62% retracement. In this case, I went right to the 50% area here, found resistance also at the hourly, and if you were watching it at the time, you would actually have gone short right here. This is the perfect trade, shorting it once it goes back below those bars. Well, let's say you miss that, and a little bit later, 934 is right here. Let's say you do something that really in the past is kind of unheard of. I rarely ever chase currencies, and chasing currencies means if you miss the trade at the ideal spot and at the place where the system tells you to go short, if it's down any more than 5 or 6 pips, I'll never get in the trade. That's called chasing it, and typically it's something that new traders do and they lose money because of it. Sometimes it works. Sometimes it makes you 50 or 100 pips by chasing it. It might have already gone 20 pips. You get in, it goes another 50. But most of the time, when you chase a currency, it's going to go against you relatively quickly, and most of the time you're going to lose money. Or worst of all, you get out of the trade with a 10 pip loss. You go and get a cup of coffee or eat, come back and look at it, and it's up 50 pips. And you took a 10 pip loss, and not only did you not make money, but you lost money. So it's very frustrating. And it's very hard to have hard and set, smart, intelligent, logical rules when you chase a currency. But what we're going to try to show in this class for scalping is, because we're using range charts, where risk is only 6 pips, because the dollar was very weak and the Swiss was one of the three strongest at the time, if we're going to take a trade right here, or even let's just say right here, and you put a stop right above your bar's high, this is how much you're risking. It's a very tiny amount. Is there a good chance, with the dollar being one of the weakest ones and the Swiss being one of the three strongest ones, that this is going to go at least 10 or 15 pips? There's a pretty good chance. Here's the previous day's high, which is a support area. Once it breaks above it, it was resistance. It becomes support. But you can see it found support there, went up, didn't go back anywhere near the highs. And so that's a reversal sign right there. This is too. Pulled back, came up. You have a series of highs, lower highs, lows, lower lows, lower lows. That's a sign of a downtrend. So, this is a support area. It could stall there. If it does, you get out with a small 3 or 4 pip win. Previous day's high, it might stall there again. It did here. It shot through it. Here's our lower containment bands. Because your upside isn't that much, I personally would have got out right here at the red band. It's also the whole number, which tends to have buy orders there. Don't get greedy. Maybe get out at 92.01. You short this at 92.08. If you have an ECN type broker, you might have made 4 or 5 pips on this trade. And it did continue a little bit into the future. But the whole point is using, and I'm going to release this probably Wednesday. I want to test it again all day tomorrow. And if it works as well as it did today, then I will release it probably tomorrow so that traders can set up their charts. I will set up a sample currency meter with this so you don't have to. And they will be stored in the charts, chart examples directory. So when you see the new release version, check in the chart examples and you will see something called build your own trend range bar currency meter, because that's what this is. And you can set these to any settings you want. You can combine all of our best statistical tools with any weights you want on any time frames you want with any settings you want, and it only works live, unfortunately. However, you only trade live, and I wouldn't necessarily trade super large lot sizes the first day or two you have it. I don't plan to myself, but once after a few days of seeing it work, being able to pick up 15 pip wins here, 7 pip wins there, 12 pip wins, 25 pip wins, and more than likely we'll get some very nice 30 pip wins. You have a very strong euro right here, very weak Australian, very weak CAD. These are two pairs that you could also have bought the euro against. You want to buy the euro CAD, you want to buy the euro Australian. As you can see on this chart, right around 10 o'clock right here, actually 10:11, the CAD was pretty weak and the euro was already strong. But let's just say we go into the future a little bit here and say from 10:30 let's look for some euro CAD buys. Strong euro, weak CAD. And let's go back and make sure I have the right time here. That's about 10:30. So 10:30, it's right here. Now this is not a range chart because I left this running overnight. It just happened to have the euro CAD on here. But let's just say you use a 5-minute bar. Now this is near the upper containment band and you have a resistance area about 12 pips away. Let's say you bought this with the same kind of idea, keeping a very tight stop. This is one of the stronger currencies at the time. And if you're in this trade and you draw your fibs on there, usually the fib target's going to be a good place to get out. Notice it went right to the 1.618. Went a few pips above it. That was the high of the move. But if you bought this breakout right here at 71 with your stop at 58 in this case, so about 15 pip stop, it went from 71 all the way up to 10. That's a 40 pip win. 15 pip risk and 40 pip win. That's more than 2 times bigger win than loss. And really, at the end of the day, when you're using something like this, which you can clearly see, the euro is just incredibly strong. The CAD is one of the weaker ones. You're going to find frequent, 30, 40, 50 pip wins. And we might take trades that in the past, would have been chasing. Because look, this already went up, pullback. This is a great pullback trade right here, especially when it breaks back from underneath yesterday's low to inside yesterday's range, or it's actually Friday's range, and explosive move. So this went up one wave, 2 waves. A lot of times trends move in 3 waves. This was the 3rd wave, and it appears to be done. And when you bought this breakout right here, notice the daily trend just shifted up to, or a bar or two into it. If you're in a trade and you see it continue to have a lot of strength like this, the daily trend shifts from down to up, and as you're in this trade, notice it goes even super strong. This pivot score, daily, weekly, monthly, is based on pivot levels, and when pivot levels get broken, it means that, in this case, a resistance area where there's likely to be some selling does not have the selling, or there's so much buying that it overcomes any selling that is there at those pivot levels and it busts through. So anytime you see this pivot score go from red to green and you're in a trade, all the better. So myself personally, how I plan on trading these, I'm going to take this trade here. It's kind of finding resistance here at the weekly pivot. It is above the upper containment band. I'm going to get out of half my trade here, and then I'm going to yank my stop up underneath each bar's lows. And when it gets this far above the upper containment band, hits the 1.618, I'm going to get out of the second half. So I would have made a very meager 10 pips on half, and it's not really a good idea to say you're going to catch every pip. So I'm going to say I get out of the second half. Let's just say it 3,100. So 30 pips on half, 10 pips on the first half. That averages out to 20 pip win. And one nice trade like that and another 10 pip win, you hit your 30 pips for the day.